Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Okay, as market has got some relief from the United States government, the situation gradually has started to change in the EU currency as well. And now, guys, we're approaching to the, if you could call it as the crucial point on the short-term analysis on the euro currency, because in fact this pattern at the top we've got 2 weeks ago. Until that moment the development was logical, but now it has become not quite logical. Why? By many different approaches. So if you will take a look and take into consideration, for instance, our 3-period rule that suggests that market should start moving your direction according to your analysis within the 3 periods. If it doesn't do that, then something is wrong. It's better to exit in position and wait for another setup or something. So market should start moving our direction within the 3 periods. Now we do not see this. Second, in fact, here there was no significant support, only weekly pivot support one here and previous swing low. So that is not the significant FIB support. That is not the monthly pivot point or something of that sort. That's really a relatively 3 area. And market has formed here the rather obvious pattern that looks like the head and shoulders to the downside, but it hasn't started move to the downside and wasn't able to achieve the minimum target. So it hasn't even reached the confluence support and monthly pivot point. It has been tested yet. It hasn't even retested the previously broken highs, and that it's a bit curious within the current setup. So I think that if you currently have the shorts, think about to close these positions, because the chances has decreased significantly that market will show move to the downside, and at least in the short-term perspective. Second moment, if we suggest that market should turn to the upside, if it doesn't want to continue move down, then what area it should reach? So yesterday we said that if market will fail, show the logical action, reasonable action as it should to do, then be ready for the taking the previous highs, be ready for the new highs, guys. And new highs, the first resistance will come around monthly pivot resistance one. It's 136.94. It's right here. That is also 127 extension of that swing. That is not the butterfly, that's not some pattern, it's just the extension of the retracement. Retracement extensions also create the resistances and support and so on. So if we will measure the 127 extension of that swing counted to the upside, you'll get the same area. That will be our short-term target for the potential move up. So now, guys, we will take a look at the intraday charts where you could see the really clear signs of market's inability to continue move lower and absolutely irrational behavior, not logical behavior that assumes that market really has no intention to continue move down. So let's take a look at the 4-hour time frame chart. So what we see here, yes, here we've got this nicely looking bullish divergence with the MACD trend has shifted bullish. As you can see this divergence, okay, right at the weekly pivot support one. Now, recall our ABCD pattern, this big pattern. That's the first moment. We said market has hit small target, that was the 618 extension, and turns to the retracement up. So if we'll take a look at the hourly time frame, yesterday we said that that could be ABCD retracement. We have said here that probably market still could fail and turn to the downside, creating some maybe butterfly, maybe or something of that sort. It could happen, but ultimately market could show the compounding ABCD retracement. So that has happened. That is logical action. Although this retracement is a bit too extended for hitting the target, minor target on the 4-hour time frame. That was just minor target. But since here we also have the weekly pivot support one, well, okay, maybe we could accept this ABCD move. So here we have the Gartley's triple to sell, and till that moment the price action was normal. That absolutely normal. Hitting resistance, some minor target, logical retracement, downward continuation. But market should continue move down here if it really has the intention to move. As normal swings should develop, downward swings should develop. First thrust, extension, retracement after the first thrust, extension. Hitting the minor target, small retracement. 618 of this most recent swing, that's normal. And downward continuation. Yes, we have retracement, we have continuation, but market was not able to continue move through this and move back again. That is not normal for price action just after hitting of the minor target. And take a look, weekly pivot support 1 holds the retracement here and here. When the weekly pivot support holds the retracement, it means that upward continuation could be possible. So upward trend still valid. And here again you could see how market behaves now with the weekly pivot point. It's tested first, bounce, retracement right back up again. So that is the very bullish action, and probably we should be ready for upward continuation in the euro currency. Now, by taking on the hourly time frame chart, that is the extension that we have discussed. So, guys, by the way, here we also have minor ABCD, and recall that that was the 100% extension, normal retracement, 618 retracement, and downward continuation. This should not be another retracement right from the same level. That's just supports the same level and shows the upward reversal. If we would have this set up on the bottom, probably I could say that this is the double bottom pattern. Small wash and rinse of these lows, returning right back again, erasing of the whole move to the downside. So on the hourly time frame you could see it clearly. So move down, wash and rinse, return right back, and market now erases the whole move down on this move. So that is bullish action. Now, how it's better to take the position here? Well, I suspect that it's more safe to take the position when market exceeds these highs. This probably will tell us that this long range candle on market stand right now has been erased, and by taking these highs market will confirm the intention of upward continuation. If market will stick here inside of this range and will remain here for the extended period, well, in this case mostly it will depend on the direction of the breakout. But sometimes, guys, this happens when market holds inside of some long ranged candle for considerable period of time, just trying to choose the direction and shows the accommodative price action. Well, that's why it just will be safer to take the position after the breakout at some retracement. Maybe if market will show this swing up, some retracement right back down to this broken level will let us to take the position. Conversely, if market will show a breakout of these lows, well, or it's better to tell it in just another manner, we could speak about the re-establishing potential bearish development, bearish trend, only if market will take out of these lows and continue move lower. So that is in fact the invalidation point for starting right now the short-term bullish setup. That's just a level to watch for. So if market will show the retracement right back down, well, maybe it makes sense to watch for them as the potential levels for taking the long position. But if even you will take the long position here or here, you should keep the eye on this development and be sure that market will take out of these highs. When this will happen, that will give us much more confidence that really a market is ready to show a move to the upside. So that's been said. Currently, guys, by different reasons that I have just talked to you, I do not want to take the short position on the euro currency, because situation has changed drastically from yesterday's price action, especially after that move. So until that point, everything was normal. Here is not normal. Probably it's better to watch the possibility to take the long position, and we should keep an eye on these levels as the retracement. That is our invalidation point, and that is our intermediate confirmation. So we need, if market will show the retracement right back down, maybe to the weekly pivot point. It has been broken around 35.43, so right here somewhere in this area. Well, in this case we could take the long position, but be sure that market will take out of these highs, because if this will not happen, market could stick with inside of this long range candle for some considerable period. So that's my current view on the euro currency.